so far this morning. Right, let's get a little bit more on today's trade, the start of this quarter. I'm joined by Ian Williams, Chairman and Chief Executive of UK-based asset manager Charteris. Are you surprised that the markets are reacting like this to Greece?
No, not really. I mean, it's an ongoing story that doesn't seem to have a particularly easy, ready-made solution. Otherwise, they would have found one. It's not, because of the complexities and political problems involving 17 different finance ministers, it's not as easy for the European situation to be solved as it was for the Fed just to come in and print a load of dollars, or the Bank of England to come in and print a load of pounds. This is a lot more complex and a lot more involved, and as a result, it's just becoming a running sore.
Is it a buying opportunity now?
I think so. I mean,
are you buying equities?
Yeah, I mean, we're certainly not selling them. I mean, and when we run an equity fund that's fully invested, and we don't see any reason to start heading into cash. It's a bit of a rerun, a mini rerun of 2008. 2008, in retrospect, proved to be an absolutely fantastic buying opportunity for equities. You needed QE, the signal to buy for the FTSE and the Dow and all these equities to have a really strong run was the first tranche of QE. When the first tranche of QE came in, the FTSE was 3,600, and by the time they'd finished, it was up not too far short of 6,000. Phenomenal gains. Now, equities are very, very cheap on fundamental grounds. That's not to say if you buy them today you won't lose money by the middle of next week, but for a medium or long-term investor, the valuations are compelling.
And at the same time, the same vein, you're not buying bonds, right?
No, absolutely, because that's the opposite story, really, is that, you could buy bonds today, they might be higher next week, but there's no value there, and once all this mess gets sorted out, the bond markets really have nowhere to go but down.
FTSE Eurofest down 2.5% now. I just want to finish up with a question on gold. The way Charteris Gold Fund was the top performing mutual fund over the past 3 months in this country. Where's gold going now?
Well, again, gold, the shakeout from gold was in response to the move up from $1,500 an ounce to $1,900 an ounce, which took place incredibly quickly. It got massively overbought. We then had a shakeout as a result of that being so overbought. And now, again, in a world where the central banks are all going to get together and print money to bail out of this mess, gold is going to go higher again, potentially much higher. I mean, the upside in gold is thousands of dollars an ounce, the downside is in hundreds of dollars.
What's your target now?
Again, over what period? Short term, don't be surprised if it heads back towards $1,900 an ounce, but gradually, it won't go up at the same speed that it came off. And long term, easily go to $3,000 an ounce and maybe higher.
Okay, Ian, many thanks for talking with us. More upbeat mood in Japan. Tankan survey showing a